All right, so this is our final session of day one of the 2022 Community Bank Research Conference. And this is always a very exciting time for all of us on the Planning Committee. I think for many, many of us in the room, this is the presentation by the winning 2022 Community Bank Case Study Competition students. But before we turn it over to them, to introduce them is the Commissioner of the North Dakota Department of Financial Institutions, Lisa Cruz.
Thank you. One of the greatest advantages for community banks is the relationship model. Having a close relationship with their customers enables a bank to really meet their needs and quickly adapt. So community banks are responsive and they show up when there's a need and when there's a crisis. So this was so clear during the pandemic. When community banks, they stepped up to the plate, they served their communities, they provided PPP loans, and they simply were there for their customers and made sure that their customers were okay. One bank's experience and ability to step up was nicely illustrated by this year's winning paper in the CSBS Community Bank Case Study Competition. The paper covered how one community bank has had to adapt over the last decade and how they're embracing new technology and fintech partnerships to continue to succeed in the future. Students from James Madison University in Harrisonburg, Virginia, they partnered with Farmers and Merchants Bank, or also known as F&M Bank in Timberville, Virginia. And it is my honor and my privilege to introduce you to the student team. It's Colin Blanchard, and he is virtual today, and Sarah Kate Garman, Nicholas Gonzalez, Amelia Patiger, and Noah Van Hoy. And the faculty advisor is Carl Larson. And Executive Vice President and Chief Lending Officer Garth Knight of F&M Bank from Timberville is also here today virtually. And more information about the students and the participants and the whole process can be found on the CSBS website, csbs.org, and also on the CSBS LinkedIn page. But now I really want to turn it over to a very impressive group of students. And so I want to give the stage to them, and you just want to hear their experience, and we'll have some questions that you can ask at the end. So I'll just turn it over to you, and congratulations on your great achievement.
Thank you, Lisa, for those kind words, and thank you everyone here for giving us the opportunity to present our research and our case study, The Changing Banking Environment from the Past Decade to the Next, a study of Farmers and Merchants Bank. So we conducted research in a couple different ways. If you could go on to the next slide, please. So to look at the past 10 years, we used data from the UBPR, as well as financial statements from F&M Bank to see where the bank was 12 years ago, or 10 years ago in 2012, and where it has come to today. Then we had conversations with bank executives at F&M, as well as with a hedge fund manager at GenOp Capital who invests in community bank stocks in order to identify trends that he saw in the community banking industry that were helping community banks grow and become more profitable. Next slide, please. So looking back, where was F&M Bank 10 years ago? So next slide, please. F&M Bank in 2012 was celebrating its 104th anniversary. It was originally founded in Timberville, Virginia, in the Shenandoah Valley, which is also where our university, James Madison University, is located. F&M Bank was around $500 million in assets, with 94% of those being earning assets. Today, F&M Bank has grown, and it's almost double that size, at actually over $1.2 billion in assets. In addition, the bank held $450 million of deposits on its books, and had a net interest margin of 3.95%. That interest margin peaked in 2018 before compressing in 2020 and 2021. Next slide, please. Now, the bank's strategy 10 years ago was slightly different than what we see today. In 2012, the bank was almost solely focused on construction, commercial real estate, and mortgage loans in the Shenandoah Valley. The bank had a very, very conservative lending policy, something that it still has today, with most of those loans meant to be kept on its books in order to earn interest income. Now, this is very different from larger banks, whereas larger banks loan with a lot of times the goal of selling off those loans as securitized products. However, in 2012, F&M Bank realized that in order to survive, they needed to grow. They saw that they could leverage their existing relationships in the community, as well as their expertise in the business environment in the Shenandoah Valley to identify new markets in surrounding towns in order to open new branches as well as new ATMs in order to help them acquire new customers and grow in asset size. Next, we're going to talk about where the bank is today. But rather than hear from us, let's hear from the bankers themselves. So we will be showing you the video that our colleague Colin put together, where we got to interview the CEO and some other executives of the bank to talk about where the bank is today and where they see themselves going in the next 10 years.
I grew up playing hockey in Minnesota, so I love this quote, but Wayne Gretzky was once asked, "What makes you such a great hockey player?" And he said, "I don't skate to where the puck is, I skate to where the puck is going." So that's one of the challenges we have to have, is we have to know where the puck is going and try to find the next technology that people are going to be looking for versus the technology that they're using today and maybe gone tomorrow. A lot of new regulations, a lot of new issues that we have to deal with compliance. I don't say that because they're bad. Some of them are a little bit onerous, some of them are probably long overdue, but they add a lot of overhead. If you look at banks pre-Dodd-Frank, community banks in particular, we might have had a few folks in compliance and oversight. And that's in addition to things like the emergence of new technology that brings more complexity. And that's not coming from regulations as much as that's just, if you look at any business, over the last 10 years, the adoption of technology and the need to bring in specialized people with the skills to integrate the technology, to leverage the technology, that understand the technology. So there's a need for a lot more what I would call non-revenue producing roles in the banking industry. We pride ourselves on being a service-oriented provider. Community banks, I think, across the country would tell you the same thing. But even though we're service and relational, our clients are demanding more and more technology in their banking services. And we've pivoted, we continue to pivot. But the challenge that comes with that is just the enormous cost of technology, right? Community banks across the country don't have the resources to invest hundreds of millions of dollars in technology. We've pivoted, we use third parties, a lot of fintechs, but it's still very expensive and proportionally far more expensive on a community bank than maybe some of the large national banks. So we have to be very good at what we select. We have to find partners that bring a lot of value for our investment.
A lot of it is finding out what customers are wanting, needing, what is their focus. It's interesting, historically in the Shenandoah Valley, there's not, if you look at, from a larger institution, the treasury services, the robust systems that they use, not as many people utilize those. More and more are going to ACH and fraud protection services. And so it's really evaluating predicting maybe what's out there, what could be coming, and then how are our customers going to utilize it.
With technology, we've got scanners, you've got increased mobile capabilities, the ability to accept deposits that are not cash. Even cash, we can in essence go set up a vault in a client's lobby, and they can deposit the cash in a vault, and then that vault gets deposited by an armored card service every so often, depending on how you set that up. So you don't need a 3,500 square foot building with 3 drive-through bays and 2.5 acres of land to support a branch in 2022. We can bring all the technology down, and we can just make the same person that opens up your account will serve as your teller, can cash your check, can open up your checking account, and can do, can make your car loan. So those people, widely cross-trained. In a high volume branch, it doesn't work as well because you're going to have a lot of people coming in for deposits, and you don't want people wanting to make a deposit getting backed up because somebody else is applying for a home equity line, and that's a lengthier process. But in a smaller branch, we can make that work. So it allows us, on a small scale way, it allows us to get a full service branch in a new market.
Whether you're working with a customer outside the bank or you're working with an internal customer, is making sure that you're giving them the best experience. And we still have to meet those requirements and keep up with those bigger banks as far as technology and products. But that's mainly how we are going to stand apart, is that we build relationships with our customers. We know their names when they come in, and they know that they can come and talk to any of us.
So this kind of brings us to the next question, which is looking forward for F&M and for community banks. So on the next slide, you can see that we can see these challenges that these community banks are facing. Is larger banks have substantially more resources to invest in technology than community banks do. Where, like the Wayne Gretzky quote, that community banks have to try and find what's next and get there before it happens, whereas these larger banks are able to invest and develop their own technology and find out what's best for their customers before the customers know what's best for themselves. Where these community banks don't have access to the newest technology, and this is the only way that they're able to stay competitive, is to be able to compete with that technology. And this kind of goes along with the changing consumer preferences as well, where F&M has a 70-year age gap between their youngest consumers and their oldest consumers, where they have to mediate between both of those, where the older consumers want to come in and be able to have that face-to-face connection, where the younger consumers want to be able to do their checking and their banking online. So this is a challenge going forward in the next 10 years, and where we're seeing F&M mediate this is by partnering with fintechs. And this kind of goes along with other community banks as well, where these fintechs allow these banks to focus on their communities and their strengths without having to worry about that investment into technology internally. That's taken care of by these fintechs, while banks like F&M are able to prioritize their interactions with everyday customers and seeing them face to face. And it's streamlined nearly all operations in every department, according to Marcana, with F&M Bank. And it's providing community banks with access to technology that they can use to actually level the playing field and compete without having to invest all of that money internally. And these fintechs are providing this option for them. So now Sarah Kate will talk a little bit more about how this has affected valuing consumer relationships on the next slide.
Committed customer service is what distinguishes F&M from its competitors. For F&M, service is a three-legged stool composed of high-quality people, its brand, and technology. Looking at the graph from 2015, consumers are increasingly preferring mobile banking rather than in-person banking. Like Noah mentioned, technology cannot be all things for all people, which is why it's important to note that while technology is increasing and becoming vital to F&M, it does not entirely negate the need for relationships in banking, as different people define value in different ways. The Chief Banking Officer, Garth Knight, stated that to F&M, relationships are everything. Community banks are often known for the relationship approach to banking rather than transactional banking, and F&M understands the importance of creating long-lasting, strong relationships and the tangible benefits that those relationships have on small business lending. F&M specifically cited PPP initiatives as an example of what community banks could do. As Chairman Gruenberg mentioned earlier, community banks played an outsized role in PPP facilitation, as the FDIC found that community banks hold nearly 1/3 of all PPP loans compared to only 15% of all bank-held loans. Because of F&M's commitment to relationships and customer service, they were able to help small businesses stay afloat during the pandemic's hardships and uncertainty, which in turn has led to sticky relationships for the bank. Essentially, PPP lending has increased customer retention. According to Catherine Preston of F&M Bank, almost all F&M customers who receive PPP loans are now transferring their other banking business to F&M. F&M exemplifies that although they do not have the financial resources to compete with large banks in terms of technology implementation and research and development, they add value in different ways. Additionally, they can choose to partner with fintechs, like Noah mentioned, to enable strategic partnerships. Community banks will continue to stand out because of their emphasis on individual relationships and the communities they serve. Technology will enhance and open many new opportunities for banks, but it by itself cannot be the one thing banks value and focus on independently. Now Amelia will talk about F&M and remaining competitive.
Coming out of the pandemic, F&M believes the main ways it can remain competitive with larger financial institutions are through excellent customer service and really utilizing the smaller size to remain nimble. F&M has entered into participation agreements with several other institutions to provide larger loans, and F&M would not be able to compete in large projects without participation agreements due to legal lending limits. And these agreements help diversify risks even below the bank's legal lending limit as well. Going forward, the bank must continue to identify relevant competitors in the changing financial services landscape. F&M will continue exploring partnerships with other financial institutions as well as fintechs to meet changing consumer needs. With that, F&M has hired a director of digital whose role is to investigate new fintech partnerships, and these partnerships will complement their relationship-based approach to lending. Next slide, please. And now we will conclude with a few key takeaways from our research. F&M Bank partners with fintechs for technological advancements. F&M Bank prioritizes building personal relationships with clients. And finally, F&M Bank saw the PPP as a catalyst for improving technology and building relationships. Next slide, please. So thank you all so much for giving us the opportunity to speak today. We will now open it up to questions, but if we don't get to any of your questions or comments, we've also left our LinkedIn QR codes up on the screen if anyone wants to scan it, and you can follow up with us there. Thank you.
All right, are there any questions? Well, I see one. Mr. Mike Stevens.
Hi, I'm Mike Stevens from the Graduate School of Banking in Colorado. I think you guys did a fantastic job on your paper. Presentation today was really good. The data is rich in your paper, but you also tell a really good story, and I think that is so very important. What I'm really interested to know is your perspectives on kind of what you knew about community banking or understood about community banking before and after. And then since you're putting your QR code up there, I suspect some of you are looking for jobs. I'd be interested in knowing just how that then informed what you want to do in the future. Thank you.
I can kind of answer. So everyone else besides me, I am the only returning to college, so I'm a senior this year, so I'm the only one without a job. So it certainly has changed my perspective on the banking industry. Prior to it, I'd had a slight fascination before doing these projects, but following this past year, I've grown a large fascination with how it all works and really the significance of community banking in every community, regardless of where it is. So it's something that I'm certainly considering now that I was not prior to doing it. Is now I'm very interested in either regulation or maybe going into community banking as well.
I think beforehand, I really saw scale, or personally I saw scale as being what you wanted to achieve as a bank. I really thought that scale would be what drove success. However, after talking to F&M and other community banks from the Shenandoah Valley, the expertise they have in the region and understanding the businesses that they have there, and understanding the agriculture that there is, really gives them the upper hand when it comes to lending for certain types. And so without this, I don't think I would have understood why community banks are successful and the things that they have to maintain in order to be successful, and the balance that they have to maintain when growing, because it's imperative that when they grow, they don't negate the relationships and they don't negate relationships in favor of just pure credit quality.
I think for me, my experience coming into the competition, I just really didn't understand the role that community banks play in their community at all. And after, this is our second case study on community banks, and I think that we have just gained a lot of perspective on the role that community banks play in their communities.
And then for me, I took a commercial lending class with our faculty advisor, Dr. Carl Larson, which kind of introduced me to the topic of the banking team. And so I applied from there. But prior to that, I had no real knowledge of community banks, just that there were a good couple in our valley, and I wanted to explore more of what they were and how they provided such a beneficial impact to the community.
Mr. Allen.
Thanks very much. It's really great to see this presentation. You guys are doing something extra you didn't have to do, and it's really nice to see. You probably think I'm just a researcher, I'm a college teacher. I teach the undergraduates. I really enjoy it. I think it's great. And my advice is that it doesn't really matter that much whether you have a job or not. You're always on the job market. You're always on the job market. You're always looking for something. You don't be satisfied with what you have. You're always on the job market. You're always on, and just remember that. And then whether you're in college or you're not in college, you're always learning. It doesn't really matter that much. You learn a different way on the job versus doing research, versus doing sitting in a classroom. But you're always learning and you're always improving yourself. And the last lesson is really like, who is your real employer? It's you. You got to do things that you want to do in the future, and do things that make you satisfied. The money and everything else, just don't worry. It kind of takes care of itself. I don't do anything I don't want to do. Nothing. I don't. And I'm stinking rich, and I'm very successful, and I enjoy it. So what? Just do that. Just do what you like. Learn the most you can do, and keep doing it. So, congratulations. Good job.
Thank you.
Thank you.
Governor Bowman.
Thank you so much, Commissioner Cruz, for recognizing me. I just want to congratulate you all on this incredible project that you've done. How you identified this bank in the Shenandoah Valley, it's really an impressive institution, and you were able to capture its essence and share it with all of us. It is a really great example of the benefits of this program, this project, and you've done it extraordinarily well. And I just hope that some of you will consider being employed at some point, wherever that might be. We have commissioners from every state, whether you want to be a regulator or work within the banking industry or start somewhere and then move on to the next. We need people like you working in the financial services industry and in the regulatory area. So think about that, and if any of you are interested, there are lots of people to talk about in this, or talk to in this room, that would be very happy to discuss that with you. So congratulations and best of luck.
Thank you.
Do you have? Yeah, Mr. Joe.
So maybe this is a little bit of a follow-on question to Governor Bowman's, or it's related in the sense that you mentioned that F&M Bank was very focused on attracting talent, or having like the very best talent. We heard earlier that and we've heard over the years at this conference that is a chronic problem, right? Attracting and retaining talent. So just in your opinion, after being in that bank and learning what's their secret in your view, like why do people want to work at that bank? What do they do well to attract, or in maybe what you've seen, retain talent at that bank?
I can start with that. I think from my personal experience working working with the executives and interviewing them, they really value their employees, and that's top priority for them. But then they also value the community in general, as in like helping. I know Garth specifically is with Big Brothers Big Sisters, and they're constantly working in the community and trying to better the community, not just through banking, but through volunteering and helping. And since Garth is on the call, if he wanted to provide any extra information on that, or if any of you want to as well.
I think for any community bank, with its focus being on relationships within the community, I think it's important to target talent that comes from the community itself. James Madison isn't a huge school, but it's not small either. However, it does get a large amount of people from the Shenandoah Valley. And so it would make sense for a community bank within the Valley to target people who live in Shenandoah. I think especially because they're going to understand what role it plays. They're going to know the businesses that the bank already has a relationship with. They might even know some of the people who work in the bank. And so rather than maybe try and compete with larger financial institutions for general talent, look within the communities, the people that are already there, because you might know their mom, their dad, their uncle, and it's a lot easier to make a connection with that person and to sell them on why you are the best start to their career, why you are the best place for them to build a career, whereas just trying to compete for everyone might not be the most effective approach.
And this is Garth. Thank you, Sarah, Kate, and Nico. And I hate I can't be there today, everyone. I'm traveling, unfortunately. But to Sarah Kate's point, for us, attracting quality team members is a very big piece of what we're trying to do at F&M Bank. I'll tell you 2 areas that we're really focused on right now is attracting young people to the bank, i.e. our college students. We've started back up our internship program post-COVID. And happy to report that we've made 2 job offers that were accepted. And for us, that's a very big thing. I'd say the second piece is the diversity in the marketplace. The Harrisonburg and surrounding area becomes more diverse daily. And we are very much focused on attracting the very best candidates and diverse folks in the Shenandoah Valley. And to, I think, Nico and Sarah Kate's point, we have a lot of relationships built within the community. We have very good market share in the Harrisonburg and Rockingham County areas. So it's enabling us to build those relationships really beginning in middle school and high school, hoping that those folks will pursue a career in the finance industry and the banking industry, and hopefully stay in the Shenandoah Valley and be with F&M Bank. Thank you.
Thank you so much, Mr. Knight, for sharing those thoughts with us. I really appreciate it. Carl White, you had a question.
Sure. I think many of us have long hoped that more universities offered banking courses. So I'd like to hear from Carl. Great first name, by the way. Kind of what your experience has been as you look, in the past and going forward.
I'd just like to start off by saying thank you to the CSBS for organizing this competition. I got to start advising teams back in 2016, the first year that the competition was offered, and it's been such a great opportunity to teach students and to partner with local banks and give them what we'd call as teachers experiential learning opportunities where they can really learn a lot more working on a case study paper like this than they might learn studying for a final exam, where we all know the feeling where you forget everything a week after you sit for the exam, but you can tell how knowledgeable this team is. They really picked up a lot working with the bank and writing this challenging research paper. So this is the first time that I've had a team actually win the competition and be here, but I'd like to say that all the other years, it's still been an amazing opportunity just from the learning and everything that happens that I just described. And with that said, I'm also very pleased to be here this year with the winning team and getting to take part in this conference. So thank you again to the CSBS and all that hard work that y'all do behind the scenes to put on a competition like this, finding judges to read papers, and just everything that goes behind the scenes. So grateful as a teacher that I get to take advantage of competitions like this.
Thank you. And I think we're at time, so if you want to give them a round of applause and connect with the rappers.